Today, no national house price recoveries yet. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. Today I wanted to discuss this article in the Australian Financial Review. The headline reads, New South Wales price gain, but no national recovery yet, PEXA says. Now, let's just start by discussing who PEXA is. So this is PEXA. It's a digital conveyancing entity, and it's got a significant stranglehold now on conveyancing across Australia. This is what it says about itself. What is PEXA? A world first, PEXA has revolutionised the way property is exchanged in Australia, bringing a digital settlement solution to Australia's $7 trillion residential property market. Through PEXA, home buyers and sellers benefit from a fast, safe and more efficient property settlement experiencing, including near real-time access to the proceeds of sale, depending on the financier, and an app that allows home buyers and sellers to track their property settlement in near real time. And they said PEXA proudly helps more than 20,000 families a week settle safely on their homes. Now, of more interest to me is who owns PEXA. And this is quite interesting. The PEXA Group is owned by Link, of course, deals with a lot of share transfers, Commonwealth Bank of Australia, and Lightyear Investments BV, a subsidiary of North Haven Infrastructure Partners 2, which is a fund managed by Morgan Stanley Infrastructure Partners. So now let's go back to the Fin Review article. And Michael Blyby from the AFR said that New South Wales housing values rose in September, indicating prices in the country's most populous state have endured the worst of the pandemic, and a market recovery kicked in earlier than first thought, says a new report from e-conveyancing platform PEXA. The near 1% gain, the report did not provide exact numbers, in the median settlement value is positive for the New South Wales market, but did not mean an improvement across the board, given economic uncertainty and the fact that pandemic-driven repayment holidays and income support measures are due to end in coming months, the report said. For while the figures show the improvement in New South Wales started even earlier than provider CoreLogic predicted, the situation across Australia's east coast would be mixed, the PEXA Property and Mortgage Insights Report said. And the chart they've included here shows the difference of trajectory between New South Wales and Victoria. In the medium term, they said house prices and new loan commitments will decline further, it said. So, never mind the headline, better read the contents of the article. And they went on in the article to say, even after recovery in the key drivers of housing activity, there is likely to be a lag before any increase in property values and sales emerge. September's gain still left New South Wales house prices down 9% after the first 9 months of the year. And in Victoria, however, prices slipped about 2% last month for a year-to-date loss in value of 14%. The report, based on PEXA's weekly 20,000 property transactions, showed. The report marks the first time the company, created in 2013 out of the combined businesses of state land registries, has published data publicly. The move comes as bankers try to assess the value of PEXA as it seeks to raise money, and as private equity group Carlyle and Pacific Equity Partners argue the merits of their $5.2 a share indicative offer for Link Group, PEXA's 44% owner. In a sign of subdued confidence of owners to put their dwellings on the market during the pandemic, new listings fell by about 7,000 homes over the first 9 months of the year, with just 60,900 dwellings listed for sale, compared with 68,300 average for the same period in 2017, 18 and 19, the report showed. Low interest rates, however, have triggered a boom in refinancing transactions, with a 27% jump in refinancing settlements over the January to September period. Refinancing of mortgages soared from approximately 20% growth in January to more than 70% in June, driven by a combination of mortgage stress and mortgagees shopping around for the best deals as interest rates fell to record lows, PEXA said. The surge in refinancing deals benefited the country's 4 big banks, which in June, for the first time in more than 2 years, reversed a net refinancing to smaller lenders. As is the case for new mortgages, the majors' growth in refinancing share may be attributed to competitive offerings and responsiveness to market conditions throughout 2020, the report said. And the report also showed residential property values held up better than commercial property in New South Wales over the 9 months to September, suggesting substantial stress on commercial property owners. Median residential prices fell 9% over the first 3 quarters of the calendar year, but commercial prices dropped 14%. The report said the New South Wales area with the highest volume of commercial transactions was postcode 2153, Balcombe Hills and Belle Vista, where sales settlements jumped 143% in the 9 months to September from a year earlier. Other postcodes with high commercial sales levels were 2010, Surrey Hills and Darlinghurst, where sales rose 50%, and 2480 Lismore, where they rose 23%, the report said. And PEXA did not give equivalent figures for Victoria, saying its data was regulated by state registrars and it did not have approval to publish the numbers. Now, there are a few points I'd like to make. The first is there has been a privatisation of property transfer data, and it is actually increasingly difficult to get good information from many places for many states now. And that's a big deal because it means that essentially we are more reliant on commercial entities willing to share whatever information they choose to share. That's a major issue because quite often, of course, that information could be skewed. Who knows? Difficult to say, other than I do know that quite often, as I've discussed many times before, prices are relating to asking prices rather than settlement prices. The second point I want to make is that this point about commercial property is really important because I'm seeing it in my data too, with a number of small and medium enterprises signalling their intent to cease trading or at least divest themselves of their premises. And I think we will continue to see significant negativity in the commercial property sector across many fronts for quite some time to come. Now, of course, you can only sell if there is a willing buyer of commercial property. And at the moment, you've got to ask, well, who would be buying? Well, maybe somebody will be picking up a bargain, but I think that we're only getting half the story. And then back to the house price story. You know, many people have been arguing for significant positive momentum in property prices in all sorts of areas. And, well, maybe there are a few examples. But here is another data source that is certainly underscoring my thematic, which is that prices are likely to be depressed for some long time. There will be the odd bright spot, but we are not back to anything like normal, and I do think it's unlikely that we're going to see significant positive momentum in home prices in many areas. And just to give you a little bit of colour, yesterday, of course, I published information about a Sunshine Coast postcode, and people kept asking, well, why are you reporting that particular postcode? Because it's not really in the mainstream. Well, the point I wanted to make was that even out of the main parts of the Sunshine Coast, in a backwater in some ways, there's still stuff going on. And of course, the predominant thematic was about subdivision, and we're seeing a lot of that around the place. And in future shows, I'm going to focus more in on some of the other areas which may be more popular, so check back another time. And there's a final point I want to leave you with tonight, which is a thought that's been developing in my mind for some little time, and it's this. You know that you as an individual or a household are effectively the product. Well, it's true certainly for digital, where your personal information is readily traded and actioned in terms of offering products and services. You see it, for example, on customized adverts on the web. But think about this. It's also as true when it comes to your financial transactions. Banks are really only interested in cash flows into the future. They're not interested in having your loan paid down. All they want to know is that they can rely on those cash flows into the medium and long term, because those cash flows are worth money. And in fact, the way that many banks consider a financial relationship and the value of that relationship is in terms of those future cash flows. One reason why the banks have been so willing and able to extend mortgages and even postpone principal and interest repayments, bearing in mind, of course, that the value is being ticked up ahead. And the point I want to make is that the agenda of the banks in terms of what they're interested in, which is future cash flow, remember that they can discount that and even securitize it and create value back, and even information flows around property settlements and property transactions is all about creating value from that transaction set. And I have a feeling that this commercialization of the financial system, call it the financialization of property if you like, and the financialization of property information, which is becoming a really big business, is actually to the detriment of most individual households and the decisions that they are taking. Now, I don't expect this to be corrected anytime soon, because we are in this new financialized world where everything is worked out in dollars and cents and cash flow and all those good things. But it is worth remembering when you're buying a property, when you're paying a mortgage, or indeed when you're online, you are the product. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.